Phil Poole nel corso dell'evento che Deutsche Bank sta tenendo con i giornalisti, il secondo qui a Londra. Phil Poole, Head of Research del gruppo tedesco. Mr. Poole, hi. Which are you conservative or bullish about the global economy, first of all?
I think we're relatively bullish. Clearly, it's been a difficult first quarter for the US. Very poor performance, actually, and the successive downgrading of Q1 GDP has, I think, taken the market by surprise. But if we look at the other indicators, most recently the employment data, non-farm payroll data that's coming out of the US, to us it indicates really that we are on the verge, if you like, of seeing that data coming through in a much more supportive way for markets. So we're actually relatively positive about the US. We see that the Eurozone has turned the corner really from about the end of the first quarter of last year, and is growing. It's not growing dramatically, but things are improving, and we expect that growth to continue to sustain itself as we move into 2015. And then in the case of the UK, certainly, this is an economy that's growing, in fact, way above potential growth. So it's raising the concern of perhaps some overheating. No sign yet of that in inflation or wage growth, but certainly an economy doing very well, probably the most rapid growth in the industrialized countries. And turning to the emerging markets, really we have a view that China is stabilizing from a growth point of view, and indeed that expectations about Chinese growth, which have been, to my way of thinking, overdone, are actually becoming much more reasonable now. So overall we're quite bullish, I'd say, on the growth environment, coming out, of course, of a very difficult period post the crisis. And what's interesting, we don't see a significant inflation threat. So we think that growth can continue to be supported by relatively loose monetary policy out of economies like the US and the UK, even though they're moving towards a tightening cycle. And probably even looser policy from the ECB and the BOJ, because clearly they're also looking to support that recovery, and there's really more of a deflationary concern in Europe than there is an inflation concern. So overall we think that that's quite a supportive policy mix, if you like, or mix of growth and policy anyway, for markets.
You seemed quite optimistic. Have you got, the same opinion about Italy?
The problem with Italy, of course, is that Italy really hasn't grown for the last 10 years or so. So if we look at the Italian perspective, there's really a lot of store being put on the reform process. So, Renzi has talked a very good story. So far, though, we haven't seen the evidence of that reform coming through. One of the issues, I think, for Italy is that, unlike Spain, we haven't really seen a significant improvement in competitiveness. So the Spanish economy is a lot more competitive than it was 2 or 3 years ago. But in the case of Italy, really there hasn't been significant improvement. So for me, the future growth outlook for Italy is really all about getting that reform process moving and really delivering what the market, in a sense, is already pricing in.
What about the investment? Which are your favorite sector, and where would you go to invest?
Yeah, well, overall we're overweight equities relative to fixed income, and that's really on a view that we are expecting to see this recovery coming through out of the US, and as I've mentioned, really Europe continuing to grow, China stabilizing. So we see equity, the equity story as a good one. In terms of what the driver is, really the multiple expansion in the US, that phase of this cycle we think is over. So it's really about earnings growth. It's critical to see that earnings growth coming through. In terms of the geographic bets that we have, we're actually overweight Japan for a number of reasons. We think Abenomics is working. We like the look of the third arrow of Abenomics, the reform process. And we also think that the rebalancing of the government pension fund, the GPIF, is also going to give a kicker to equity performance. So we like the Japanese market. We like Europe in relation to the US because we think the valuations are more attractive on a relative basis. And we also like certain emerging markets, but really that's about differentiation. We prefer the Asian markets, so we're overweight Asia, for the most part anyway, and we're underweight Latin America and underweight the East European markets.
Well, thank you, Mr. Poole, for being with us.
Thank you very much.